So today we are going to discuss a little bit of procedures and obligation under the self-assessment system. Taxpayers are required to compute their own tax liabilities and submit their income tax returns based on accurate and honest report.
So hi everyone, my name is Natasha binti Zakwan. My MDA is 2211059. So let's quickly talk about tax estimate. Companies are required to estimate and pay their tax in advance, even before the actual income is finalized. They need to submit form CP204 through e-filing at least 30 days before their financial year begins. If they don't, they might face penalties. So it's important for business to stay on top of this and submit on time to avoid any issue.
Now, monthly installment. A company is required to pay their estimated tax payable in monthly installments starting on the second month of the basis period of the assessment. To know the amount paid for monthly installment, the tax estimated in the beginning of the year have to be divided into 12 monthly months, and the payment has to be made before or on 15th of the month. Next, revision of the tax estimate. Companies are allowed to revise their estimated tax payable at the beginning of the year. The company required to submit form CP204A in the 6th month of the year assessment to revise the estimate. There are two methods to determine the amendment installment amount. Firstly, the company have to determine whether the amendment tax estimate is more or less than the amount that should be paid. If the amendment tax is more than the amount that should be paid, the remaining amount had to be paid in installment based on the number of installments available. However, if the amendment tax estimate is less than the amount that should be paid, then the termination of payment is.
So next, let's talk about submitting the income tax return using the C form for the year 2023. Companies have 7 months after the financial year ends to submit this form. So if your year ends on 31 December 2023, the deadline is 31 July 2024. The C form must include accurate details. And before submission, the company needs to pay any remaining tax balance, which is the difference between actual tax and installment paid. Missing the deadline can lead to penalties, which increase depending on how late the submission is. Companies also need to keep their financial record for 7 years as they might audited by the Inland Revenue Board. Thankfully, the e-filing system makes this much easier. It simplifies the submission and payment process, so businesses can handle everything online quickly and efficiently. Thank you for listening.
This one is amendments of return. First, the company must submit its tax return by 7 months after the end of financial year. This makes sure all income, expenses and tax calculation are accurate and pay any tax due by the deadline. And second step is amend the return if needed. If the company discovers errors after filing, they can amend the return within 6 months of the original deadline. Please use Form C amended to submit the correction. Amendments are only allowed once and must be submitted before an audit starts. And step 3, pay additional tax or claim refunds. If the amendment shows more tax due, pay the extra amount, including any penalties. If the company overpaid, they can claim a refund from the IRBM. And step 4, avoid penalties. Filing late or submitting incorrect information can result in penalties of up to 100% of the underpaid tax. Please keep the record for 7 years in case of an audit. And lastly, voluntary disclosure. If errors are discovered after amendments window, the company can voluntarily disclose the mistake for reduced penalties. And that is all.
So the last one is final payment of income tax. After submitting the tax return and making any necessary amendments, the company must ensure that the final payment of income tax is made. If the total tax payable is more than the amount already paid through the monthly installments, the company must settle the outstanding balance when submitting tax return. On the other hand, if the company has overpaid it, may request a refund. Failure to pay any outstanding tax on time will result in a 10% late payment penalty, which can escalate further if the payment is delayed for an extended period.